Live from Music City. Well, actually, not Music City, unless Sacramento, California is Music City. Live from Sacramento, California. This is your sensational, inspirational, educational, motivational, keenly awaited, highly anticipated edition of the Trading Floor with your humble host, Andy Barbosa and Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding you to love life, live life, and trade it. Chris Irwin, how you guys doing? John Higgins, Brian Bodie, what in the house is going on? Fred Shotted, my man, my main man. Hope you're doing great. Okay, so let me actually minimize this. That's the other video I'm uploading for you guys right now. Okay, so this is the third hour, and the third hour is the last hour of the trading day. And what we do on Mondays, most Mondays, is Merchant Mondays. So what we look for on Mondays are mostly retail companies, Macy's, JCPenney's, Rite Aid, Walgreens, CVS, things like that. So we cover our merch, Whole Foods, whatever, companies that sell foods to people in retail-ish fashions. So that's what we do on Mondays. Tuesdays are always Tech Giant Tuesdays. Wednesdays have already become probably one of the most popular days ever on the trading floor and on the internet. And that's going to be Weeklies Wednesday. And what we do on Wednesdays, pretty much every single Wednesday, is we go out and we find option strategies that expire that week. So we're either selling puts, selling calls, or doing bull put spreads or bear call spreads or both, and expiring in 2 to 3 days for somewhere between 4 and 10% return. That's what we look for on Wednesdays, and that's really becoming a very, very popular day in the trading floor. Thursday is Transportation Thursdays, and Fridays are Finance Fridays. And I do record the last hour of the trading floor every day, so if you don't get a chance to make the entire 3 hours live, it's absolutely okay. The third hour, what we do is the first 15 to 20 minutes is I review general market sentiment. So let's go ahead and do that now to give you guys an example. So looking at the DIA. The DIA is the ETF that tracks the Dow Jones, and we got a lower shadow today, which is fascinating because lower shadows represent buying pressure. And I mentioned that last week that that's probably exactly what we would do, right? We get a little bit of selling pressure and probably get some buying pressure towards the end of the day because there is a very, very strong support at around the 170 area. Now, I'm not saying that we can't go lower. We definitely can. But if you are in a protective put or one or two or a few, this is a good place to take some profit off the table with your protective put because we are at a support. But if we do close below 169.85, I will be a little bit more bearish than bullish if we close below there. Let's go to the hourly chart to kind of see what the next few days could look like, the next week or so. We had a really, really good buying candle come in, and we had a really good buying candle the last hour, but the volume really isn't there. There is a lot of bearish volume. As you guys can see, the bearish volume is pretty dang high. So if we gap down tomorrow, which I don't anticipate us doing, but if we gap down to about 169.62, it would be a pretty decent bearish retest gap, and it would be interesting to see. If we start taking out the high of around 172.41, and if we gap up there tomorrow, that'll probably be a little bit more of a bullish day. But realistically, I probably do kind of expect a smaller inside day candle tomorrow, maybe a nice little bullish candle. And if we do close above this little pivot of 172.40 and some change, I think we're going to bounce. Last year, pretty much around this exact same time, January 2014, we bounced February 2nd, 3rd, 5th. I'll come over here and show you guys. And here's the bounce. So January, we had a little bit of a sell-off, and then we bounced after the Super Bowl, after the Seattle Seahawks won. So maybe the market wanted the Seattle Seahawks to win, and we sell off. Yeah, I don't know. But at this particular point in time, my thought is that we do bounce and probably continue a little bit of sideways momentum. And if the market hates on Tom Brady and we close below 169.85 and start really kind of free falling, I will have a small bearish tint to my analysis for, a little bit of February, maybe leading into March. still expecting to buy the bounce. So I am more bullish to neutral on the general market. Here's the SPY, and kind of the same thing. High wave, doji candle with a long lower shadow. So again, we are trading to a support. If you are in a protective put right now and you want to exit, again, you're at a target, you're at a location where we could bounce, and we'll keep a closer eye on it. If we close below these wicks on the SPY, we'd have to do that pretty soon. If we triggered below 197.51, I would be a little bit more bearish than bullish on the market. I do expect us to bounce a little bit here. Just kind of my thought, and we'll see what's going on. So that's my SPY. So on Wednesday, that'll kind of be the understanding of, did we bounce? Are we bouncing? And maybe we can do some spreads. Last week on Wednesday, we got into an iron condor on the SPY expiring last Friday for 4% return. So that's not too bad. It's not too bad. So overall, we'll see what happens. So that's the SPY. Decent support. If we come into the hourly chart, let's look for some gaps tomorrow. I really kind of expect us to gap a little bit. If we gap up to here, 202.28, I will be a little bit more bullish than bearish. If we gap up above 201, I definitely will be pretty bullish after that gap, and kind of expecting this is the bounce. So if we're starting to create a trading plan, gapping above this level, we could get into a weekly bull put spread down here somewhere, and we would know exactly where to unravel, which would be a close below 197.51. So just keep an eye out for a gap tomorrow. We'll see how it kind of plays out and see what goes on. The Qs, QQQ, kind of the same thing, a little bit of a bearish candle, but a lower shadow. And we have a bull put spread. We had a 13-cent return, 13% ROI on that trade. That's expiring next Friday, which is the 98.97. So we're not going to look at this credit spread unless we close below 99.18 on the. And from that, I don't expect us to close below there. We definitely could. One candle can change everything. But again, I'm a little bit more bearish than, a little bit more bullish to neutral on the market in general. And the IWM, same thing. We got a decent little hammer-ish candle, a little bit of a lower shadow, and I'm in an iron condor on the IWM. 122, 123, 112, 111, February expiration. And that was a 23% ROI trade that will expire in February, hopefully worthless, and I'm hoping it goes to option heaven. So I'll be keeping an eye on that as well. That's kind of my general market thoughts, ladies and gentlemen. Any questions, concerns, thoughts, opposing views, anything you guys want to look at specifically? And something else to keep in mind, just kind of as a refresher, the trading floor is a request center for stocks. If you guys ever want to look at anything on any specific day, you're absolutely able to request any stock. I'll look at anything. I'm just giving you guys an idea of what I'll be looking at on those days, unless you guys give me something else to look at. So on Mondays, unless it's Mentorship Monday, which is today, the first Monday of every week, Merchant Monday, we look at a lot of retail stocks, and that's just what I'll look at. But if you guys want to look at, whatever, we definitely can. We pretty much every single day look at, the famous stocks: Apple, Amazon, Google, Facebook. We pretty much look at those every single day, Alibaba. But if I don't, you're more than welcome to look at it and request it. Let's just hop over to Apple, because number one, my good friend Fred wanted to look at this, and also, it's Apple, and Judy wanted to look at this too. So looking at Apple, we're just last hour, we're talking in Mentorship Monday about perfect gap and goes. And this particular candle was a nice black candle. We gapped above some pivots. Was this a gap and go, ladies and gentlemen? Yes or no? And the answer was and is yeah, it was. It was a gap and go, and it was actually a perfect gap and go, because Apple was a black candle on the daily, the hourly, the 15, and the 5 on that gap up. Now, the interesting thing was on Apple of that day, and Fred, you said you didn't get a chance to trade it. I think that was actually okay on your end, because on Apple, it didn't really play out as perfectly as one would have hoped on that day. Not that means much, but there were 2 times that you could have gotten in on Apple, right? So if you have a perfect gap and go, if it doesn't trigger, there's always another time to enter that particular trade. This is where Chris Irwin and most others who entered Apple entered it on that perfect gap and go day. So Brad Reed had a really, really good call on the 1 minute chart, but I'm not going to go into the 1 minute right now because it would take too long to get back here. But pretty much he entered somewhere bullish around here and stop was around here on the 1 minute. So it was a 1 minute chart. It kind of pulled back and it was a nice little hammer candle and he took it bullish. But let's go to the exponential moving averages and let's look at the normal, the normal rotation of everything. And the second trade on Apple was, as always, to wait for the retest. Right? If it's not a perfect gap and go, you wait for the retest. And even if it is a perfect gap and go, sometimes the candles are too big, sometimes the risk reward is too big, or sometimes it just doesn't trigger. And if that's the case, I would truly say 90% or maybe even more, maybe 95, 96% of the trades that you guys are going to take are going to be retest type of trades for your day trades. And what does that mean? Well, it means you're going to be waiting about 30 minutes or so, sometimes longer, sometimes 30 minutes to an hour, and you're going to wait for a bounce off of the moving averages. That's what it means. A bounce off the moving average in the direction of the gap. So Apple was a great gap. It was a bullish gap. It gapped above pivots. It trapped people. Everything was hunky-dory. And bullish entry somewhere right around there. Stop was somewhere right around there. And your 2R target was up in this area right there. So bullish after the hammer candle with a bounce off the moving averages, stop below the wick. And again, do you know that trade's going to work out? No, you have no idea. But you're taking the probabilities of the fact that it's a gap and go because it's a black candle and it gapped up. It cleared a pivot and you have a hammer buying candle at the low of the day. So you would think in that situation, okay, I'm trading in the direction of the gap. I'm going to place my entry and so on and so forth. What do you think, Fred? Is that kind of what you were thinking? Was that your takeaway from that gap? He said yes. Perfect. Sensational, man. So what about now, Captain Hindsight? What about now on Apple? Well, now, wow, how'd I get way over here? Now what I'm looking for is this gap. I'm not expecting this gap to fill. You guys have heard me say that before, and I've been wrong before, right? that has happened before. I'm not expecting this gap to fill, at least anytime soon. It definitely could, but I don't expect it to because it is a really, really nice gap. So my trading plan, and pretty much exactly what I want to see play out, is playing out at the moment. We are at a resistance. We're at an all-time high. So please keep in mind that Apple could do this. Will it? I doubt it. If it does, you best believe that Big Dog Jay Newsom is going to be looking to get into something long down there. That's your support. So that's the location where I'd be looking to buy. Buy low, sell high, right? So Ronald McKee, a good friend of mine and a real life trader, he's kind of expecting the same thing. So he's doing some put sales. So he had a put sale expiring last Friday that was profitable. So now he's doing a 106 February week 5 and a 112 expiring this week. So the 112 is right here. So bottom line, unless Apple gets down to 112, that put will also expire worthless. And the 106 is down here. So if by February week 5, Apple does come down to 106 and doesn't bounce, then he would get put the stock at 106, which is where he wants to own it at anyway. So now on Apple, what I'm expecting and what my trading plan says, and that's really all we can do, is I'm saying this gap should not fill. And it probably won't. So I'm looking to go bullish with a close above 120.15. My quote-unquote stop or my protective put at the moment is 114.92. So this is my risk. If you want to make this a stop, you can make this a stop. I like to trade with protective puts, but that's about it. So this is about, let's just call it $5 and some change worth of risk. $5.23. So ladies and gentlemen, this would be a swing trade, right? This is not a day trade. So if you have a swing trade, let's say your swing trading R is 200. You take 200 and you divide it by the difference in the two numbers. Okay, so 120.15 minus 114.92 equals 523. 523. So you take your risk unit of 200 divided by 5.23 and you come up with 38 shares. How many option contracts is that? Zero. The big zero. So you could do 38 shares of Apple. That's how much you could risk with $200. And your targets would be 2 times that, right? So your target would be about $10, which is right about here. So that's your 1 to 2 risk to reward ratio in Apple. And that's exactly what I'm looking to happen. I would love it if Apple trades up into here, boom, 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 and then breaks out. And we might have a much, much tighter risk to reward. I might be able to place a protective put here and that be my risk, and then have a stop right there. So we'll keep a close eye on that to see if that plays out. Brian said, maybe it's just me, but I was waiting on a close with Apple for a swing trade of greater than 120 even. You know what, Brian? Being 15 cents off from you makes me smile. So from here, it's just a waiting game. That's all we can do. If we come into the hourly chart on Apple, the hourly chart doesn't look too bad. We're above most of the moving averages. We're definitely above the 50. And, we bounced off the 10 very, very nicely the other day. I still think we'll probably do something like this and then break out. And if that happens, guys, this could be one of the greatest trades to plan your trade and trade your plan as possible. It'd be a great opportunity to trade your plan. Which just means I have no idea what it's going to do, but no one really does. So if we hang out here, all week, this would be like stock market manna. This would be a phenomenal opportunity to get in. And last week, we also did a weekly bull put spread on Apple that expired profitable. So I'm going to try to, this Wednesday, probably do another one somewhere down here if there's any premium in there. Maybe the same one, 113, 112. It'll just depend on how much premium's down there. So, again, that's kind of what we do, right? I mean, you guys will request stocks, and then I'll go look at them, and we'll do some analysis on it. We'll analyze the gaps, entries, targets, all that stuff. So here's Whole Foods. On Whole Foods, we have we went in bullish not too long ago, and John Higgins and a few others got into this trade. It traded up to some targets. 50.28 was one target. 53 was the second target. And we took our stop up to 51.79 to exit us if we did get stopped out, which at some point we did get trailed out if you did not exit all of your position at your target. So it was a profitable trade on Whole Foods. At the moment, the next plan is to buy the bounce off the 50. Earnings is coming up right around the corner. So riddle me this, ladies and gentlemen. What if we get some sideways movement in here, a black candle or something, and then in 2 or 3 days, we gap down to right there. And our plan is to buy the bounce off the 50 on Whole Foods. Yes or no? Could you go in to the hourly or 15-minute charts, look at the sentiment of the candles, and place a swing trade off the analysis, planning your trade into the future? And I would say yes, absolutely. This is what I work the most on with my coaching students, is being able to trade your plan and write your plan down in the future so that if you can control yourself, you can control the market. From here on out, it's just all about being disciplined. It's about if you have your plan and you want it to do whatever it's going to do and it does it, you do it. And that's that. So that's our plan on Whole Foods. Will it happen? I don't know. I really don't. But if it does, you pull the trigger. So let's go look at a few other next target on Whole Foods. We'll be up 56.39. So if we do, on earnings come down to the 50, maybe your entry is here, your stop is there, and your ultimate target is up there. And that's a good risk reward. And you just simply plan that. You write it down and you follow through it. Look at Office Depot. Office Depot, I had a stop. I think it hit it today. This was a trade that a good friend of mine, another real life trader, Orkin's been in for a while, and the low of today was 740. So yeah, you would have gotten stopped out if you had a 741 stop. And we got in not too long ago from this gap on a swing trade. Or was it a little bit earlier? It actually might have been somewhere over here. I'll be honest, I forgot the exact day that we got in. I didn't personally take this trade. I'm just kind of following up on it, but it doesn't matter. At the moment, even though if we got stopped out, it would have been a trail out because it was a profitable trade when Orkin's gotten in. Ladies and gentlemen, riddle me this. What type of gap action is it right there? What do we have? What type of gap is that and why? Brian and Zane and Cheryl and Catherine are all saying that this is a retest gap. It is a retest gap because the candle is white and it gapped up. Simple. So even though we just got stopped out on Office Depot, as far as my analysis is concerned, yes or no, could you have a plan for Office Depot to do something like this? And I would say, yeah, because it's a retest gap. So on a swing trade level, we are expecting the stock to come down to that gap, come down to the $6.98 old resistance, new support, and potentially bounce. Here's your 100 simple moving average, which is the blue line. Will be even better if Office Depot took its sweet time, came down to here, this line caught up, and then we got a nice hammer candle or something like that. Right? So this is just you write it down and you buy the bounce. Buy low, sell high. Right? So instead of buying Office Depot up here and hoping it goes higher, you buy it down there where you have good risk reward ratios. Where you have a buy low, sell high. And that's, it's always good to remember. So here's the plan. Buy low, sell high, buy the bounce. There you go. Boom. How you guys think? So yes, right now we don't have an exact entry. We don't have an exact target. We don't have an exact stop. But yes or no, do we have an idea of what it could be? Because I'm not going to write them all down for every stock. But we have a general idea, right? Our entry would be somewhere around here. Our stop would be somewhere around here. And our targets would be somewhere up here. I don't have an exact price yet, but we have a general consensus of what we would look for. And I do realize that sometimes you guys will be, a little bit frustrated if I don't put the exact plan for every single stock. But I do that intentionally so that your brain is thinking, hey, what should I do? What should this thing be? And bottom line is if you guys do want me to build out an exact plan for you for any particular stock, just ask. I don't know which ones you guys are following and which not. I know what stocks I'm following. But you guys, it's a request. This is a request-based, show trading floor, and I want you guys to be happy. So if there's ever a stock that you want me to look at specifically, just let me know, and I will. And if you want a specific plan, let me know, and I'll build out what I would do. Doesn't mean that that's what you should do exactly, but I would say in this situation, this is what I would do, and go from there. Because everyone has a different strategy. Right? Everyone's a little bit different. You guys have different charts, but we're here to kind of understand, my viewpoint, my sentiment, and what I would do. And then from there, go enrich lives and be awesome. That's really about it. That's really about it. So let's go look at another retail. Let's look at Walmart. Marsha, are you here right now? Marsha. Do you guys like that Super Bowl commercial? That was kind of funny. Anyway, the reason I was asking Marcia is because you said Ralph got his promotion from Walmart. So tell him I say congratulations, by the way. So here's Walmart. And on Walmart, we got into a bullish trade not too long ago where, this was a protective put because it was a stair-step pattern. And I expected Walmart to go higher. But I said if we break this level, if we break this low, get into a protective put to protect yourself. So we'd have at least mitigated our risk, exit our long position at 86.65 and held on to our protective put. If you're still in your protective put, you could probably place your stop on that put, and you're actually probably profitable on it. Probably have that protective put stop brought down to 85.57. Since I don't know anyone in this trade exactly at the moment, I'm just going to erase both of those. I'm going to come in here and we're going to look at this as a swing trade. Now, earnings is coming up in late February. So we don't have too much we can do in this particular trade since the earnings is approaching. Now, if you're in a trade over earnings, you definitely can protect yourself. And I always, kind of say that we should. But let's see if there's any premium for an advanced strategy called a put sale for this week or next week. Okay, let's do next week. I doubt there's going to be a lot of premium, but there might be some. There is a little bit, and I think that might... Let me go just verify earnings. Earning Whisper. Because it looks to be a little bit too much premium for Walmart. Walmart. Oh, thanks, Angie. I think it just barely beat
I can get it.
219 confirmed before open. Huh. Okay. Looks like we got some premium. $83. Again, that's not a lot, but $83 is right about here. 82 could be even a little bit better. 82 or 81. So again, you're not really robbing the bank, but an $82 put sale expiring February week 2 is free money. 82 February week 2 put sale. How much limit would I make that? 26 cents, 27 cents, 27-cent limit. Analysis on 2/2/15. So what this particular strategy is saying is simply you're selling a put at 82, and if Walmart comes down and closes below 82 before Friday of next week, you're going to get put the stock, meaning you're actually going to physically buy shares at 82. Now, would that be a good location to buy shares, in your opinion? I'd say yeah. Right? Buy low, sell high. We broke out of this level here, came back, and if we got down here, and that's a good place to buy. Let's ask another trivia question. What if this was the candle and we close here today? What if tomorrow on Walmart we opened at this pink line? What type of gap would that be? If tomorrow we gapped at the pink, well, what line? That fuchsia? Is that a fuchsia line or a pink line? Or passion fruit. That's a passion fruit line. Magenta. Hey, Jay, nice job.
Yeah, I think you could ask
All
10
about
different
our,
people and get
our
10
ability to
different
see
answers.
color. This is pink to me, or maybe light purple. Anyway, whatever. It would be a gap and go. And you guys are all flawlessly correct. Jay, very good job. High five. You've been practicing your gaps and you got that one spot on. The reason it would be a gap and go is for two reasons, right? Candle is white and it gapped down. And it's gapping below the wick of this candle and the pivot right here. So it's clearing pivots and it's gapping down and the prior candle was white. That makes it a gap and go. Simple as that. So we're going to do this put sale on Walmart. And for any other trade, we're just going to wait to get into earnings unless you guys have anything specifically you want to look at. Because again, I I don't know too many of you guys who are going to get into a Walmart trade over earnings. There are a few of you who might own shares now, and if there are, you guys are welcome to let me know. But I like the hammer candle, and in my opinion, it kind of looks like we're about to bounce on Walmart. It looks a little bit more bullish than bearish. Now, we could absolutely go lower because this particular candle, this little chart pattern right here is not the most bullish chart pattern in the world. Looks kind of like an island reversal. But we'll see. We'll see. I think it'll come, if it's going to gap down strongly, it's going to have to do something with earnings, which is in about 2.5, 3 weeks. Let's go look at Alibaba and then Yahoo. These have been popular requests. Alibaba, perfect bracket trade. At least I think so. Now, if we close below 87.11, I'd be more bearish than bullish. I wouldn't just be flat out bearish. I don't think Alibaba's going to go to 0. If anything, it'd probably pull down to 84, maybe 82.50, and then likely bounce. Because there's a lot of support on Alibaba from recent times, right about here. So if it did trigger bearish, and came down here, that'd be a good place to buy. And that's why Jay Newall, she did her put sales down there. Because if you get put the stock down there, that's not a terrible place to buy the shares, right? Because now you're buying low, selling high. When a lot of people wanted to buy Alibaba up here, and I pretty much said HE double hockey sticks, no. No, do not buy up there, right? Buy low, sell high. So if you're doing a put sale and you want to get put the stock down here, that's not a bad situation because if the stock comes down, you get put the stock and then you have all of this potential upside to make money, and this is your risk. So I think it's a good plan, in my opinion. So right now we're just kind of waiting to see what's going to happen. Right, nice little bracket trade. If we close above 92.16, I'd be more bullish than bearish. If we close below 87.06, I'd be more bearish than bullish. On the hourly chart, we can kind of look at the sentiment of the gaps, and we can kind of see that there's not a lot of sentiment. There's not a lot of gaps. It's just really kind of sideways. It looks to me like there is some kind of buying pressure right about there. So I'm still on board with if we close above 92.16, I'm more bullish than bearish. So it's 92.16 and 87.06. And again, keep in mind that I believe earnings is not too far in the future. I think it's semi right around the corner. Brian said, is Baba going to have one of those things like Twitter did when the employees can share? Yes, absolutely. I think it's Q4 of this year. Okay, so you guys are saying Baba already had earnings. Okay, cool. I guess this giant gap down, that was probably earnings.
Good for them, because my earnings whisper, I got one of those error messages. Oh, snap, okay. Your pay died.
Cool. Very cool.
It's already happened.
Yeah, so there you go, guys. I mean, I'm bracket trading it, and if we bounce here, I could see why. And if we go over, I don't think Alibaba's going to free fall. I really don't. We shall see. Let's go look at Yahoo. Yahoo is an interesting predicament. And the reason I say interesting, it's at a pivot point right now. And it looks kind of similar to Alibaba. It really is in the middle of a gap, and it's between the 100 and the 200 simple moving average. Ladies and gentlemen, this is a retest gap. So I'm kind of anticipating that Yahoo could do this and then roll over, or it could continue higher. And that's the part that I just really don't know. I'm really not sure. I would say, Zane, let's go into the hourly on Yahoo, and that will be our entry. So look at the hourly, and the other day I thought this was a flag pattern, didn't end up being a flag pattern. Here's your exponential moving averages, and we're below them. I would look for something like this and like this. And if we start popping strongly on Yahoo, you could have a pretty decent entry with a stop, being around here somewhere. entry being around here somewhere. So 44.53, stop being about 43.50. So about $2 of risk, and your target's the filling of this gap. So it's about a 1 to 2 risk reward ratio on Yahoo. That's really the best way that I would pull it. Okay, so you're getting pretty much the exact same numbers I just threw out. Perfect. Yeah, I can see that. And that's what I would be looking for, is because, yeah, I can easily see a bounce coming in through here. It is a retest gap. We're expecting this gap to fill a little bit, if not all the way. So that being the case, on the daily chart, you got a really, really beautiful hammer candle. And right now we're having a pennant on a 2-day. It's going to break one way or another tomorrow, I would assume. Which way? Gosh, if only I knew. If only I knew. If I ever do get a genie from like a genie lamp and I get one wish, I just want to be able to foretell the future by like 20 minutes. That's all I would need. If I could predict 20 minutes into the future, I'd be a millionaire in a week and a half. So if you guys invent a time machine, let me know. I will personally fly to your house. We'll use the time machine for a week, week and a half, and we're done. What's up, Ange?
Can I ask everybody a question that has occurred to me? If you get a genie in the bottle and you get one wish, how come people don't
That's a good
just
question.
ask for
That's one of
unlimited
those genie
Is there
rules
one
that
wish?
they don't allow. Either that or he'd
the
say
genie
you're
would
selfish
say,
and now you get no
try
wishes.
again. Darn.
It depends on the genie, but yeah, I know.
Darn.
I think it's
I've
against the
wondered about
genie
that
code.
ever since I was a kid. That would just be the easiest thing, but... All right.
Aww,
No, it wouldn't be greedy
sweet.
because I have a lot of wishes for everybody else too. And I don't want to use them up on me. Yeah, Zane. I agree. Okay.
Zane said, I would ask the genie why he is selfishly
I don't know. I don't think
keeping
it's
all those
resolved.
wishes to himself. Yeah, it's true. No, very valid question, Angie. Very, very valid question.
All right. Thanks, guys.
Ooh, Johnny Guarks is saying just ask for another 100 genies. Ooh, good question. Good question. Oh, it's Jill? Oh, sorry, Jill.
No, that's Jill.
Jill said ask for more genies. Oh, that's a good thought too. What would your one wish be? Okay, let's just say you can only get one wish. What would it be? I think you guys have mine. I think I was actually kind of serious. Like world peace. I don't know if a genie could just grant that. Again, I don't think it's against the genie code. You can't make. I'm basing my code off of Aladdin here. So I'm taking all I know about genies from Aladdin, which is So your one wish. I think mine would be the ability to tell time in the future, just by a few minutes. I wouldn't need much.
I would think that your one wish would open a whole bunch of other doors to accomplish.
Yeah, well, because then that way I could see if a disaster is going to strike somewhere.
So it's a good one.
What's going to happen to people. It'd be. Pat says, if you use a genie, is it insider trading? No. I don't think genies are bound by U.S. laws.
Now we're just making up genie code. Yeah, it's inside the bottle trading.
Nice. We have fun here, guys.
Other
That's the other part
connotation
of the trading
entirely.
floor. We do talk trading, but there are tangents that, for a good 20 minutes, especially if it's a slow day. Today is a slow day. Let's see what's going on. Oh, thank you, Donna. I appreciate that. All right, cool. So that's Yahoo, Alibaba, and the Genie code. So what we do also in the third hour is in the last 15 minutes of the market, we go look at what's gapping tomorrow and go ahead and come up with a plan for what's gapping tomorrow. Now the good news is, ladies and gentlemen, tomorrow is the morning trading floor. Have all of you guys already signed up for that? Because I know most of you here want a morning room as well. So if you want to sign up, go ahead and sign up because it does begin tomorrow. And Brad will walk you through the gaps, real time, what's gapping, and all that kind of good stuff. Farouk says, I have, and I'm waiting for the leak. And Peg says, I'm all signed up. Perfect. So the link is going to be very similar to the afternoon link. Once you've got it, that's going to be your link. You can just keep that link. Am I right on that, Angie? Okay, cool. So yeah, Angie's we're gonna be emailing that link out tonight.
You are very right.
Tonight, tomorrow morning before the thing starts, and 2 different links.
It is not the same. They're 2 different links. Unfortunately, we had to keep them separate, Peg, because there were some people who just want to stay in the afternoon session. So.
Cool. Yeah, so just FYI. But we're still going to do that in the afternoon as well because some gaps can change. And I think if my opinion and Brad's opinion are the exact same on a gap, I think that's a pretty good coalition of gap knowledge. So let's what's gapping tomorrow, guys, as far as earnings? You guys have anything on your list? While you're giving that to me, I'm going to look at ExxonMobil. ExxonMobil does have earnings very soon. And yes, that is a beautiful, beautiful morning star reversal. So we're going to keep an eye because I think, Exxon had it today, didn't it? Exxon had earnings today. That is a perfect morning star reversal. So pretty much we take it above the high of tomorrow. Now remember on Exxon, so if we're going to look at an intraday gap, if we open here, ladies and gentlemen, tomorrow, what type of gap is that? It's a retest gap. So you would wait for the retest before you get an intraday for your swing trade. Right? It's because I would be bullish on ExxonMobil. This would kind of be a longer term trade, I think, for my longer term traders. Let's see what an 85 February put sale is going to bring us on Exxon. Because a put sale in Exxon would also be a really pretty decent premium. But if it's not, then we just won't worry about it. 85, yeah, it's bringing in 95 cents. You guys sure earnings has happened already? 95 cents, wow. Okay. If you want to own shares of XOM, 85 February put sale, 95-cent limit. Analysis on 2/15. And that's if you want to own shares. If you literally do not mind owning shares, because it's very, very close to the current price action, but 85 is a rock solid support on ExxonMobil. Here's the weekly picture of it. You're getting a morning star reversal. It's at a good support. If we break that support on ExxonMobil, it's over. ExxonMobil put sale. Extremely strong support at 85. I'm bullish to neutral anyway. Tags, put sale, XOM, real life trading. I'll publish that idea for the world to see. Peg says today before open was on Exxon. Perfect. All right, good. Well, there you guys go. All right, so ExxonMobil, done. You guys were actually, while I was chatting today, you guys were talking about Qualcomm. And I think Ray Rue posted the first setup on Qualcomm just a few moments ago. And that's what I love about the teamwork here, guys. Very nice. So you have the bullish gap. We had a bearish gap. So we had the day trading gap not too long ago, which worked out for an hour and a half for a few people. Today, Ray just posted a trade setup about an hour ago. I don't know the exact numbers, but it worked out whatever it was. I think here was the resistance he was looking at, and he wanted to go bullish here with a stop there. Is that right? Something to that extent. Ray, great trade. Thanks for posting it for the students in the chat room who are here live. On a daily time frame, this looks like a morning star reversal. Looks like a morning star reversal. This was a bearish retest gap anyway, so it could fill a bit. Watch for a move higher on the hourly 15 and 5 tomorrow. And that would be, so this is a morning star. So ladies and gentlemen, if we move higher tomorrow, we probably will go higher. That's really kind of about it. So 67 to 87 would be a pretty decent target, but it looks pretty on the hourly chart. Again, for a morning star, you have a bunch of white candles in a row. So if we open up here tomorrow, right, it's a retest gap. Let it trade back, buy the bounce, boom, boom, something to that extent. So that's Qualcomm. The gaps, you guys are saying UPS gaps. Perfect. So UPS is going to have earnings. This was a perfect gap and go, ladies and gentlemen, the other day. So you can kind of see how that played out. At the moment, there's going to be some interesting pivots on ExxonMobil. Really kind of the best gap would just be an open up small gap below 98. A good bearish gap would be a small gap down open below 98. This would be a gap and go. If we gap down to 95-ish, be cautious. I spell cautious. Be cautious. Some buying could take place since it's at support, and the short sellers will be locking in a profit. If it gaps far below that, be more bearish than bullish. So yeah, so if it gaps down to here or so, 93 and some change, that's kind of where we're going to be a little bit more bearish. Make sense, ladies and gentlemen? Any questions on that? So if we gap down tomorrow, pretty much it's a gap and go. Now it just depends on the location for UPS. That's really about it. That is really about it. So let's go look at Archer Daniels Midland. Archer Daniels. Come here, Daniel. Woo! We got some support kind of right about there. This looks like it could be a clean gap on ADM. I don't know what direction it's going to gap yet. Again, I wish I had that genie power, but I'm going to put it right about there. And I bet if I put this one down, it'll sync up pretty nicely. Yeah. Okay. So here's what I would like to see on ADM. If it gaps up, ladies and gentlemen, what type of gap would that be? That would be a retest gap. I like it to get above 49. If we gap up above 49, bullish retest gap. If we gap down below 45 would be really good. Let's put down below 46.50. If we gap down below 46.50, likely a gap and go. Smiley face. I don't really know what else to put. That's what we got. Okay. That's ADM. EMR is another one you guys say is gapping. Emerson Electric Company. Emerson Electric. Do you value trust, dependability, customer service? Emerson Electric has been around since Walt Emerson. We're a trusted American electric company for the last 763 years. We've been providing your electric needs before electricity was invented. Come show your support at Emerson Electric Company. Super Bowl worthy right there. I'd kind of want to gap down. A gap up would be a decent retest gap, but there's a lot of pivots that kind of need to clear. I mean, if it gapped up above 64, great, but I don't know. 55.65. If we gap down below 55.65, more bearish than bullish. I think the dogs are about to start barking, by the way. Just letting you guys know. I think someone just got home. So if we gap down below 55.65, more bearish. That's a pretty bearish gap and go on Emerson Electric. And then we have AET, Aetna. Let's see, we got some support resistance around 85. Aetna is a pretty interesting move right here. Do you guys see this? Let's drop this down to here. I doubt it. I mean, I doubt it gaps below 85.65. If it does, that would be a pretty bearish gap. I just don't think that's going to happen. But what do I know, right? I don't. If it opens below this wick, if it opens below 90, that's a pretty bearish gap. So if we open below 90, pretty bearish gap. If we gap up because of the lower wick on today's, well, I'll put on 2-2's candle, 2-2-15 candle, decent retest gap. I don't like Aetna as much. There's a lot of pivots on it. You got to pivot here, you got to pivot here, you got to pivot here, you got to pivot there, you got it there. There's just a lot going on. If we cleared 85, sure, that'd be a phenomenal gap. Otherwise, There we go. So there's the earnings. I think they're coming out between today and tomorrow. Let's just take a quick look at Facebook, see what Facebook's doing. Decent, nice black candle. Get a little bit of lower pressure coming in, so that's interesting. Let's go look at the market for the end of the day. IWM, beautiful hammer, just what I want to see, honestly. Doing a whole lot of nothing. That's exactly what I want. Anything you guys want to look at in the last 7 minutes? Another great, successful Mentorship Monday. MU, thank you, Cheryl, MU. So MU has been working out very well. We got into a protective put the other day, and we had to unravel this bull put spread. We had a bull put spread, and we needed to unravel it because that was part of our trading plan. So once we started unraveling, we unraveled it on 128.15. We bought to close the 28 put, and we're holding on to the 27 put currently. Let me come show you guys how much the 27 put is currently worth on MU, expiring this week. And if you're in that put, I'd probably be looking to exit or get out pretty soon. But that particular put option has increased 100% in value today. So it right now is worth, you could sell it for 15 cents. So it really depends on how much you unraveled the 28 for. But if you're still in the trade, if you're still in the 28, 27 bull put spread, we unraveled it, like I said, back in here somewhere on the 28th. So if you are still in that spread and you now have a 27 put that you're holding on to, I would probably take the stop for that put and now make it 29. Would now be 29 if you're still holding. Updated 2:15. You're in a long position. Your stop got hit today, so you probably exited your long position. And if you're in a protective put, your stop for your protective put is either 30 or 29. Either one of those two locations. Cheryl said she bought a 30 put. A protective put, Cheryl, are you still in your long position? Or you're just in a put now? Jay said, Jeremy, I really got a lot out of this session. Thank you. Yeah, my pleasure. You're absolutely welcome. Thanks for being here for 3 hours, guys. I appreciate that. Like I said, I know a lot of you are retired. This is your day job. A lot of you guys have a job and listen to this on the phone or just in passing or at your work. But either way, I just want to thank you for your support, ladies and gentlemen. Truly, I'm very blessed to be a part of your lives. Cheryl said, I got stopped out. I'm just in the protective put. Perfect. Okay. That's what I thought. So good for you. I'm glad you mitigated your loss. I would kind of say at this point with your protective put, place a stop on it so that if MU does go up, you don't lose a lot on your protective put. $30 stop on your protective put should be okay right now. And with the look of this candle, it does look more bearish than bullish, in my opinion. So Victor, did you exit also? And by the way, guys, this is in my opinion pretty beneficial for us to talk about our trades together like this. That's another benefit of the trading floor. Even if you don't get a chance to make it live, please know that you always can. If you can't make it live, you can email me your trades that you guys are in, and I'd be happy to look at them. In fact, that's exactly what Page You did. Give me 1 second. Page you stock request. Best avenue. Okay, gotcha. So I'm gonna reply to that email. She literally was asking what's the best way to request something to look at, because she doesn't come often to the live class. She watches the recordings. So bottom line, ladies and gentlemen, you can email me if you want to look at a stock or you're requesting something. Just email it to me, and I'll write it down. Pat says trader therapy. Yeah, doing it together. It's a good time. Cheryl says February week 1. Okay, yeah, so if you're in a February week 1 protective put, it should be decently profitable at this point, Cheryl. Have a stop for it and trade it to a target. Make a little bit of money on it and then move from there. Because yes, as I mentioned, time value is a concern. So you don't want to necessarily hold it to expiration, but place a stop on it and let's see if MU continues lower. It should. Looks like it will. Looks more bearish than bullish at least. Google's going to be a fun one to keep your eye on, ladies and gentlemen. This was a really, really good retest gap, and it retested today, and it's kind of doing exactly what I wanted it to do. This is a double bottom on the hourly chart. Double bottom on the hourly after a retest gap. More bullish than bearish, especially short term. So, something to keep an eye on there. And we'll see what's going on. But it is a retest gap, right? Here's your hourly retest. Boom, boom. There's the retest. Yada, yada. A little bit of double bottom. So if you get in right now, your stop could be 517. 517.78. Entry about 530.86. If we close about 547.07, in my opinion, that's the inverted head and shoulders neckline. So target would be about 569 and then 609. So there's definitely a lot of risk-reward ratio on Google. Very interesting to keep in mind. UPS, yep, has earnings, and there's the earnings analysis. So tomorrow morning, guys, is the very, very first beginning of the permanent morning trading room. I'd love for you guys to be in there and give some support for Brad. Again, I think it's a pretty awesome price for both rooms. And if you're already in the afternoon room, it's only $50 more for the morning. And those two are combined. And I hope, $50 for an entire month of morning room, that's 1 R on a very, very small account. Meaning I think it'll be just fine. I think it'll pay for itself in time. Ladies and gentlemen, a phenomenal Mentorship Monday, if I do say so myself, because I just did say so myself. I appreciate you guys so much. Thank you for your kindness, your support, being here for Mentorship Monday. And tomorrow is going to be Tech Giant Tuesday. We're going to speed it up a little bit. Not too much, but I'm going to crank up the dial. And by next week and into the end of February, I'm going to be full on Newsome mode. And if you guys want a refresher, feel free to watch these videos. And then in March, I'll be doing another Mentorship Monday for the first 3 hours, again, for new traders or traders who just want to kind of review the concepts. But starting tomorrow, I'm definitely going to go a lot faster. And then next week, I'll be full on Newsome. So, ladies and gentlemen, I love you guys. Have a great day. It's 1 o'clock here in California, and I'm about to go get into some trouble after a few hours of work, and I'm excited. I don't even know what to do with myself. I have so much time. It's 1 o'clock. I'm stoked. All right, guys, I love you. I'll see you tomorrow. And until then, remember, love life, live life, and trade it. See ya.